let's get right into it. We got a feisty market on our hands, so let's jump right into the market outlook. And, the SPY remains, S&P remains in this grind-out market, this momentum market. We had some semblance of a pullback last week, and when the market gets this high, gets this overbought, if you will, it can get fueled to get higher because everyone's waiting for the pullback. So the market starts to pull back a little bit, shorts pile in because it has to pull back soon, and that can propel us to keep going higher. Don't get me wrong, this pattern will eventually break at some point, but until then, we're seeing some great momentum in the market. We're seeing some really great moves in some of the earnings names. That's really, it's really been that simple for me. Just riding out the trend, not overthinking it, not trying to pull back on my stock. It seems like any these decent setups, if you don't overmanage them, most of the time in this market, you're getting bailed out. I'll show you what I mean later with my good trade, bad trade, and stuff like that. But it's just kind of like this market's pretty feisty right now. We need to see like a 4% down day to break the pattern. So until we see like a 3% down day, I'm just gonna keep riding the trend, keep buying these strong earnings names, things like that. And I'm just really keeping it that simple. It's been working really well for me. What are you thinking over there?
Yeah, very similar. With the SPY, like the most recent pivot's gonna be under 460. But same thing you said. A lot of individual names have been setting up, and we've been seeing a lot more follow through in these names where it's like the opposite of what I feel like we were seeing in the beginning of September when we were at highs at that point. But a lot of individual sectors or setups weren't getting the follow through that we were expecting, and there was just kind of that internal weakness that eventually led to a little bit more of a pullback. Where now, I'm looking at like my stocks on the radar, like 40 names, and 35 of them are up on the day, and up big. You mentioned like that ON this morning, it's up like 23%. So there's like a lot of these like bigger winners, where like a lot of the names that are down aren't down as much. So it just seems like a lot of the internal stuff is kind of in our favor for that grind up, when everyone again is looking for the opposite to happen so they can get back in. So
that's actually a great point. I didn't even really think about that, because in September we were at highs, and all the chart talks we were talking about, like, I know the market's at highs right now, but the internals look terrible. We're not seeing the breakouts, things like that. And now we're seeing them across the board. So now it's really when you want to take advantage. Until we see that trend break, we'll see it break eventually, but timing it is going to prove rather difficult. As we've seen, we got a decent, a 2% pullback last week, and it immediately got bought up. We're back at all-time highs. So just ride the trend and enjoy it while we got it. That's what I'm doing. It's keeping it very simple as that.
Yeah. Really quick, just three sectors that are still setting up. Again, we have the energy sector that's been just bull flagging very nicely here. The proper spot would be to add up through those highs of 384. And we have financials, same thing, nice little bull flag, at their all-time high, same thing, you'd look to add up through those highs through 101. And then lastly, the telecom sector continues to base out here and could look for an entry in some of the telecom names up through like this 146 level. So a couple sectors still setting up. Again, some of the other ones look a little bit more extended, but again, as long as you just trade and versus those pivots, you can just kind of ride the moves higher.